Hello, hello. So we are still waiting for others. Hello, hello. Can anyone hear me? Hello. If you get my voice, I just want to hear how shall we continue. Okay. And please, if you want to talk or if you want to say anything, address the your speaker or address your mic. Okay. And anything you want to say or anything, any question you want to ask. If you hear what I'm saying, just reply. Why? Why is anyone not playing my voice? Maybe you should check your side here or if you are notice.
There's more sound.
So someone is here, someone is talking now, but I can hear your voice.
I don't know if you can hear us.
I can hear you.
But we can't
Okay.
hear you. We are not hearing you. I can hear the man talking.
Okay, that means all of you move the mic before. I think we should start now. Okay? I think we should start now, okay?
You can't no voice.
No voice, sir.
But
We can't hear you.
I can hear your voice now. But I want to ask, are you hearing my voice? Hello? Are you hearing my voice? I don't think so. Hello? Hello?
Hello.
I can hear your voice. I can hear everyone's voice. I think we need a confirmation that we can actually start. Okay? So now, let's start. Okay, guys. I think I would like to apologize again for delaying you guys because yesterday we should have started the class, but unfortunately, my system got some technical issues which I need to resolve. Okay? Okay? Thank you guys once again for attending.
Okay, now can you hear my voice?
Yes. Please mute everybody.
Yeah, I can hear you.
Okay, you can hear me now.
Yes. But
Very
please
good.
mute everybody. Mute everybody.
Okay, now I have mute everybody. Now can you see hear my voice? If you hear my voice, let me see that in the chat area. Okay, now you can hear my voice. Okay, I think we should start now. Okay, guys, once again, I want to apologize for what happened yesterday. It's just that I got some technical issues which I need to resolve with my laptop. Okay, so and I want to appreciate you guys for coming once again. Okay, and I know the reason why you guys are here because you want to learn something and you want to know some things about the binary option. So this class will only be for binary option. So I will announce the forex class anytime. Okay. And if you have any question to ask, it is either you say it is either you message me on this chat room or on the WhatsApp group so that I can see. And if you have any picture or any screenshot, you can just send it to the WhatsApp group. Okay. And if you have any question, just message me in this Zoom group chat or the WhatsApp group. Okay. Thank you. Okay, now let's start. Give me some minutes. Okay, for me. I need to check. Okay, today's topic, we're going to talk about some candlestick. We're going to talk about some important candlestick. And when you are trading, you should take note of all these candlestick in the chart. Candlestick are not just formed. Okay, I think, let me see, because I got a message. Once again, let me ask, is everyone wait? You are coming. Okay, guys. Okay, let me check if I'm recording the video. Okay, I think I'm recording it. Okay. When we talk about trading in the financial market, it is the same principle. Okay. It is the same principle as normal trading. Think about someone who trades shares. What they are actually doing is buying shares or a small part of the company. If the value of those shares increases, then they make money by selling them again at a higher price. And in trading, this is trading. You buy something for one price and sell it again for another. It's just like normal trading that we are talking about. So when you got some, or when you see something, or when you observe, when someone say that maybe the first time you start trading on binary option, you might have been hearing people that saying, okay, we are trading, but it seems that you don't understand what you mean by trading. That's why I'm bringing the word trading. Okay, this is trading. You buy something for one price and sell it again for another, hopefully at a higher price. That is making a profit and vice versa. Okay. Now, but why would the value of a share go up? The answer is simple. In trading, the answer is simple. The value changes due to supply and demand. The more demand there is for something, the more people are willing to pay for it. That is just some of the explanation of trading. Trading binary or trading forex will not make you rich overnight. So take that. Some of you, I know some of you want to become rich, or you want to change from your situation to another. So you are planning to trade and you want to become rich. But let me tell you, the old truth is trading will not make you rich overnight. Yet it can provide an income stream alongside your normal job. So you can be doing trading and at the same time you can be doing your normal job. So this trading can be giving you profits, providing an income, bringing you profit alongside with your normal job. It is even turned into a business depending on how much time you are willing to invest. So in trading, you should not take trading as a gambling, or you should not take trading as anything else, but take it as a business. So I take trading as a business and I didn't have any other things doing apart from trading. So trading is my hobby. Trading is what I did every day. I start trading since 2014. I started trading since 2014. By then, I don't have any knowledge about trading. I just knew that you just go to the chart, the graph, then you buy or you sell. Then anything you see, either you buy, or anything you see, either you sell. So I just have that in mind, that is all I know about trading. But when it took me days and time to really study the real trade when we talk about trading. So I knew that trading is not just for making money. It's just like a business. It's just like a business. Okay, can you hear me? So now just be not just be maybe you can hear me. Let me see any response. Okay. I think I got 2 response. Okay. Now, trading, you should take trading as a business, not as money making machine. Never you take trading as a business, and never you take trading as a money making machine, but take trading as a business, because it's a career, not anything else. So, and for you to be profitable in trading, you need to apply discipline and consistency. When I joined trading in 2014, I had passed through so many things, I faced so many things, and I observed so many things. In fact, what I passed through even made me to become a professional trader today. And I think some of you might be wondering that, but because I'm expecting that from some of you to ask me, why is my name called JavaBoy? That's my nickname. Why is it called JavaBoy? So I'm expecting someone to ask me or because that is not my name, but my nickname. Okay. Why my name is called JavaBoy is because there are two things I love doing in my life. One is coding, and the second one is trading. So I love trading and I love coding. And my best programming language is Java. So I'm very good in Java programming language. I built so many softwares and I built so many applications. You can go to Play Store, you can see some of my apps there. So I love that language. So I choose that as a Java. I choose that as my nickname. Even when I was in school, that's what they call me. They call me Java Boy. Some call me Coda. Some call me Java Boy. So that's why my nickname is called Java Boy, because I love coding. So two things I love doing. I love trading and I love coding. Okay. So now let's go to the point. Today we are having, okay, let me see. The one we are having the definition of candlestick psychology. Candlestick psychology. Definition of candlestick psychology. Before you define candlestick psychology, first define what is candlestick. Before you define that, first define what is candlestick. And that will give you assurance of what is the meaning of candlestick psychology. Okay. Okay, now a candlestick is a type of price chart used as display the highs, the low, open and closing price of a security for a specific period. Say for example, look at this chart here. Here we have so many chart types. We have the line chart, we have the candlestick, and we have the bar chart, and this one also. So here I'm using the candlestick chart, and you can see the formation of each candlestick. Okay, you can see the formation of each candlestick. And now, when we talk about candlestick, as I have explained earlier, that is a type of price chart. That means if the price is higher, the candlestick will tell us. If the price is lower, the candlestick will tell us. So it displays the highs, low, open, and closing. Say for example, look at this. Let's say for this candle, look at this bearish candle. Okay, come here, let me. Look at this bearish candle here. This bearish candle opened from this level and closes at this level. So the bearish candle close, open from this level and then close at this level. Now, when you're talking about the highs and lows are the wicks, or you call it rejection. This the highs and this the low. The highs and the low. The open and the close. Okay. Same thing with bullish candle. Okay. Same thing with bullish candle. The bullish candle open from here and then closes here. And this week we are seeing here, and this one also is the highs and lows. That is the highs of the candle of the price and the lows of the price. Okay, now you can see the definition of candlestick. Okay, that is a type of price chart used to display the highs and low or open and closing price of a security for a specific period. It is originated from Japanese rice merchants and trader to track market prices, daily momentum, and also hundreds of years before becoming popularized in the United States. Okay, the white part of candlestick is called the real body. That is the main thing about candlestick, the real body. The main thing about the candlestick is the real body. The real body here, the body of the candlestick, and this one also, the bullish candle and the bearish candle. That is the main thing about candlestick. And it tells investor whether the closing price was higher or the lower price than the open price. Okay. So the higher price for the day and the open and closing price. And also the lower price for the day and the open and closing price. That is all about candlestick. Now, when we talk about psychology, psychology is the behavior of each candlestick on the chart. The behavior of each candlestick on the chart. That is, if you see a bearish candle here, it tells you that the price is going down. And if you see a bullish candle here, it tells you that the price is going up. So this is psychology of the candlestick. That is why it is called psychology, candlestick psychology. So it tells you what is happening in the market. When you see a bearish candle or when you see a bullish candle, what does it tell you? It tells you maybe the price is lower or maybe the price is higher. So this green candle is called the bullish candle. And whenever you see a bullish candle, that means the price is high. And whenever you see a bearish candle, that means the price is low. Okay. So it tells us the behavior of each candlestick. I know that is the main purpose of you guys attending this class. So you really want to know the behavior of each candlestick. So before we go to that, let's see some candlestick, some important candles in the chart. So I think I have made some here. Some important candles in the chart. Here we have a spinning top candle, a bullish spinning top candle, and again a bearish spinning top candle. All these candles you see here, they are the most important candlestick in the chart. Whenever you see them on your chart, you should pay attention. You pay attention to them. You know what they mean or what they are saying or what they exactly mean in the chart. So when you see a spinning top candle, it tells you that this is indecision between buyers and sellers. So it doesn't mean that maybe this candle is a bullish. Still, it's a bullish candle, but it tells you the indecision between buyers and sellers. And there are different kinds of spinning top candles. Some of you might be confused. There are different kinds of spinning top candles. One here we have, look at this bullish candle which I just explained now, and let me show you another one like this one. Now look at this. The upper wick is longer than the lower wick. Still it's still called spinning top candle. And again, this one also spinning top candle. The upper wick is longer than the lower wick. And which one? Let me show you again. Okay, like this one, the lower wick is longer than the upper wick. So these are the different kinds of spinning top candles we have in the chart. And if you have any question, just leave your comment in the chat box, chat room, or the WhatsApp. Okay, here we have the spinning top candles. That is a bullish spinning top candles. The price opened from this level and then closes here. Now, what are the psychology behind these bullish candles? Psychology behind these bullish candles tells you that the buyers and sellers are on the same level. They are on the same level. The buyers want to push the price higher, but rejected from sellers. Again, the sellers want to push the price lower, but rejected from buyers. So this is now indecision candle, indecision between buyers and sellers. So you pay attention to it. Whenever you see this happening on your chart, you should pay attention to the trend or the levels. Pay attention to the trend. Same thing with this bearish spinning top. The buyers want to push the price higher, but rejected from sellers. Again, the sellers again want to push the price lower, but rejected from buyers. It means that this is indecision between buyers and sellers. Indecision between buyers and sellers in the market. So whenever you see these two candles, you should pay attention to it. You should pay attention to them on the chart. Either they are formed in the middle of the trend or they are formed at the SNR levels. And if you see a spinning top forming in the middle of the trend, either the bearish or the bullish, is a continuation sign that the market will continue. Or if you see them at the support or resistance, it's a reversal sign. That means the market is about to reverse. So you should pay attention to it. Okay, I think let me show you on the chart. Okay. Now, let's say for example that this is a downtrend. This is a downtrend. Okay. Now, let's look for a spinning top candle as a continuation sign or as a reversal candlestick. You can see here, look at this bullish spinning top. This bullish spinning top is formed at the resistance. You might be asking, how did I know? If you look at the left side, this is it. Previous support to become resistance, and you saw this spinning top candles at the resistance at the previous support level that should become resistance. It means that the market is showing sign that the market will reverse. And what are the psychology behind this spinning top here? What is it doing here? Firstly, you first analyze, when you're analyzing the market, analyze. The first thing I do when I'm analyzing the market before I took any trade, the first thing I do, I will first analyze the momentum. I'll first analyze the trend, that is the major trend. And again, I'm going to analyze the minor trend. At the minor trend here, I'm seeing a bearish movement here, a beautiful movement. And it broke this support level. And at the support level, I'm seeing that these buyers also close below the previous support, a sign that the market wants to reverse, and a sign that these bearish candles, this sellers movement want to continue the market. That's why you're seeing this spinning top at the bottom of this support level previously. So it's showing a sign that the market will reverse here. It's showing a sign that the market will reverse. Yeah. So the psychology here behind here is that after this strong sellers movement, show you, after this strong sellers movement, the buyers try to enter the market. You can see from this level. Now let's start analyzing the candles here. Okay. From this level, this is a bearish candle. The bearish candle is forming. And this bearish candle formed because the buyers are becoming weak here. You can see, look at this lower wick here. This is a sign that buyers are becoming weak in the market. Now this bearish candle form here, forming with a strong selling pressure. I will explain that to you. Some of you are confused that what is the difference between selling pressure, rejection, or wicks. So I will explain that to you later. This bearish candle formed a strong selling pressure, and the buyers tried to enter the market. They rejected the market at this level because already we have done the level. And see, let me show you. Look at the level, look at the buyer's entry, and on reaching this level means that sellers try to go more down, but on reaching this level, this point, the buyers rejected the market. It means that buyers are present here. Buyers are present here. And look at where the candle closed. The candle closed here. So this is a sign that sellers still want to continue the market. Buyers tried at this time, failed. And now the sellers managed to form a bearish candle here. And again, this bearish candle already closed below the buyer's entry point. That is, the price, the sellers want to continue the market, but on reaching this point, it got rejected from sellers. So it means from buyers. So it means that buyers are now changing their entry from here and to here. So buyers are here previously, and now buyers change their entry from here to this level. So buyers are now here. And again, look at where this candle closed. The candle closed. So the body of this candle is still far from the buyer's area. That's why sellers still use that opportunity to form a bearish candle. After forming a bearish candle, you can see that buyers tried to enter the market, failed. Again, they tried the second time, failed. Now they tried the third time. Trying the third time is when the sellers reach this level. The sellers want to go down from this level. On reaching this level, it got rejected from buyers. It means that buyers are now changing their entry from here to here, and then from here to here. So buyers are here. And look at where this candle closed. This candle closed here. So the body is still far from the buyer's entry point. So that is why sellers use that opportunity to form a bearish candle. And after forming a bearish candle, I will explain this to you. There's one thing I want to let you know when you are trading the momentum. When you are trading the momentum and you want to predict what will be the next candle, this is a bearish momentum, right? But here, the buyers try, fail, try the second time, fail, the third time, and fail. And here, the sellers came in very strongly. Some of you will be looking for opportunity to continue selling the market or for a put option because you saw that the buyers try here, fail, try it second time, and the third time, they fail. But now you see a strong sellers. So you may likely to put a put option here, but that is not how to trade on a momentum like this. In a momentum, you should expect that if you see a strong candle like this, and you look previously on the left side and you see that the candles are very small. Look at this, the previous candle is very small, smaller to this one. It means that buyers have already tried to dominate the market at this area but failed. But now sellers are being exhausted. That's why you see that after this strong candle, buyers enter. So you should have that in mind that after you see a strong candle in a momentum like this, after you see a strong candle, after you see if a strong candle form, before or after this bearish candle. That is a weak candle. That is the last candle that formed is bigger than the previous candle. Then it means that this is a sign that buyers will enter the market. That's why you are seeing a bullish candle here. You can see this candle is very small and this one is very big. So this candle is telling us that sellers are being exhausted. Their power is no more enough in the market. So it is now left for the buyers to now prove to them that yes, we are in the market. So now buyers enter the market from this level. So before that, the sellers also want to push the market lower. But on reaching this point before, the buyers reject. You can see from this level, buyers rejected the market. And again, after this candle close, let me make it clear. After this candle close, that is the closing price of this candle. After it closed, the sellers, because of this momentum, the sellers still want to push the market lower. But on reaching this point, which is buyer's entry point, if you check it on the left side, you will notice that there are some buyers at this area on the left side. So we check that later, but let me explain this. So sellers still want to push the market lower, but got rejected from buyers. It means that buyers are here. So because of this candle, exhaustion candle from sellers, it means that buyer will still form a bullish candle. That's why you're seeing a bullish candle here. And you should now take note that some of you now say that, okay, this is a weak buyers and this is a strong candle. You should know that already sellers are already exhausted here. And buyers try to enter the market. Buyers try to enter the market with a strong body here. So you should not say that this candle has already engulfed this bullish candle, then you go with sellers. No. These buyers are already shown a sign that yes, we are active in the market at this area. That's why you're seeing a strong candle. So the buyers still try to go more up. But because of this strong downtrend again, the sellers try to push the market lower. But on reaching this point, the buyers rejected the market. So if you check on the left side, you will still notice that there are some buyers at this area. So I will show you I'll show you that later, how to analyze that. So the sellers still want to push the market lower, but rejected from buyers. So buyers managed to form a bullish candle here. Then previously on the left side, which was a support level, buyers closed exactly at that level because buyers still want to push the market up higher, but rejected from sellers. It means that the sellers are here, and this candle closed at that level. This level that this bullish candle close is not a seller's area, just that sellers are waiting to enter the market at that area. So it's not a seller's area, it's just a level, a previous support to become a resistance. So it's just a level. So the seller's area is here at this week here. Sellers, the strong seller's area is here. That's why you're seeing that buyers still want to go more up on this level. On reaching this level, will be rejected, and sellers enter the market. So the strong sellers area is here. It just closed at this support level. It's a sign that the buyers now become weak. And when you see this candle, a spinning top candle at the level or at the support or resistance level, it's a sign that the market will reverse. A sign that the market will reverse. Okay. Now, when you see the spinning top candle in the middle of the trend, so let's find that. Okay. Let me show you the spinning top candle in the middle of the trend. Okay, look at this one. This is a bearish downtrend, yeah, and this candle form in the middle of the bearish downtrend. It means that the sellers, the buyers are here. This is the next level. Some of you will go all the way to check the previous levels, but it's wrong. First, check the recent level. What happened to the previous level? Not going back on the left side to be checking levels, to be checking. You can see there are so many levels. So why then should you go to too much left side to check the levels? Although you can still use them, but you should focus on this, that this bearish downtrend will not even respect any of these levels. So OTC market is fond of doing that. Any levels, any previous levels, any area that has so many levels, OTC market will never respect those levels. They rather go to the nearest or to the one that is far. So when you see a spinning top candle in the middle of this bullish trend, you should know that the sellers still want to continue the market to this level. This is a level right here. This level. So you should know that the sellers still want to continue the market. And look at where this spinning top candle is formed. It's formed in the middle of this bearish downtrend. It means that, and there's some gap, there are some gap here, there are some gap from this level to buyer's entry point to the next level. So it means that because of this strong sellers movement, they will easily form a bearish candle here. They will easily form a bearish candle. So this spinning top is now a sign of continue the market to this level. This is buyer's entry. And on this buyer's entry, you can see so many rejection. So I will explain this to you. Why is it that this candle got rejected from this level, but and also close with a weak candle? Still, the market still form a bearish. I will explain that to you. So I'm just explaining only the spinning top candles for now. So this is a spinning top candle in the middle of the trend. Look at this one also. Formed in the middle of the trend. The next one was a seller's movement, a power move. Most of the time, I call it a power move, a power movement of sellers to the next level. Okay, that is all about spinning top candle. Now let's go to some the other candles. Now, hammer candlestick, or you call it hanging man. Hammer candlestick, or you call it hanging man. It's still the same. When you call it hammer or hanging man, it's still the same. They look alike. So I will explain this to you. When you saw this candle, you saw hammer candlestick. Hammer candlestick is the psychology behind this hammer candlestick is that this is a bearish hammer candlestick. Maybe this hammer candlestick is formed after a bearish trend, or is formed after the sellers exhaust their trend. It means that this lower wick is a sign that sellers want to go more down from this level. But on reaching this point, the buyers rejected the market. They rejected the market. And still, this candle still closed as a bearish candle. Same thing happened here. After maybe the next candle was a bearish candle, So because of the forces of this bearish candle, the sellers still want to continue the market to this level, but on reaching this level, the buyers reject the market and close here. It means that this is a strong buyers area. Strong buyers area. So now let's see that in the chart. They can also be used as a continuation sign or reversal sign. They can also be used as a continuation sign or reversal sign. Let's see that in the chart. Okay, here. Now look at this hammer candlestick, red hammer candlestick. Here we have so many levels. We have the previous we have the previous resistance, and also we have the previous support. So these two levels, you keep attention to it. Some of you now go all the way looking for where this candle will close and say, see some levels here. Now, look at this. This is a hammer candlestick. And this candle close, I will show you. There's one thing I want to tell you guys. Show you, let me draw this slide very well. When you see a hammer candlestick, you might be wondering that this is a level, but this market didn't reverse at this level after seeing a hammer candlestick. This is a sign that if this candlestick close like this, if this bearish candle, this hammer candlestick close like this, without crossing this area, without crossing this level, maybe a very small rejection, close like this, without crossing the level, the next candle will be a bullish. But here, look at what happened. Because of this strong, because of previous strong seller's entry, he tried to form a bearish candle. Yes, he tried to form a bearish candle. But sellers, because of this strong seller's entry, the sellers also want to continue the market to this level. But on reaching this point, it got rejected from buyers. Meaning that the buyers are here. The buyers are here. And look at where this candle closed. The candle closed exactly at the previous resistance. But because the sellers tried or forcefully make a new low, this is a new low. That means it closes below this previous level. This is a new low. Sellers forcefully make a new low. That's why the next candle form a red. But I will explain these two scenarios to you, these two candles, this one and this one. I will explain to you what happened here. Why is it that after this candle close with a new low, the next candle form a bearish candle? I will explain that to you. So this candle now is now a sign of continuation sign because of this new low. So the sellers are strong. It's a continuation sign that the sellers still want to continue the market, at least to this level. But what happened to this level? The candle break this level and then close below this level and then continue moving downward. This is a strong sign that after this hammer candlestick form here, is already a sign that seller will still continue the market to the next level. So sellers are very strong at this time because of this new low. So this is a hammer candlestick that stands as a continuation of bearish trend. Continuation of bearish trend. And let me show you the hammer candlestick as reversal candlestick. So I'm looking for a proper hammer candlestick. This one now is a continuation of bearish trend because the next level is here. So you continue after a strong bullish movement. This hammer candlestick form. So you continue the market to the next level. Same thing happened here. You continue the market to the next level because the level is here. You can see the level is here. You can see after this hammer form here, this is the level. But here, because of this strong sellers entry with a new low, it means that the buyers at this area now become weak because the sellers forcefully make a new low below the buyer's entry point. So the next candle form a bearish candle with the hammer. So this candle is supposed to reverse. This candle is supposed to reverse, but it didn't reverse. Why? Because of this new low. Previously, the selling pressure of sellers is very strong here. It makes a new low. It means that the buyers are here. And look at where this candle closed. This candle closed here. So it's still far from the buyer's entry. That's why it stands as a continuation of bearish downtrend. But I'm looking for a reversal. Now look at this. The reversal candlestick. As it is previously a support level, previous a resistance level, again some reversal. Now take note, whenever you see any of these candlesticks, here, all these are continuation candlestick and reversal candlestick. Whenever you see them on the chart, you should observe where they are formed. Mostly, if any of these candlesticks form at the let's say at the reversals area, I will explain that to you. At the reversal area, you should know that the market should reverse. You should know that the market should respect that area also. Okay, so let me continue. So the reversal, look at this one now. Hammer candlestick, it reverse the market. It reverse the market because this is a, you can see, previous support to become resistance, and then previous resistance to become support. Look at it here. Previous support to become a previous resistance. Sorry, previous resistance become a support. That's why, and you are seeing the, you can see what I said. So you can see what I said before. So when you are placing your line, you should place it at the lowest candle, not the highest candle. When you are placing your line, I will explain that to you. That will be maybe day 2. That will be tomorrow, how to place your line properly. Yeah, you can see. Now look at it. This candle closed exactly, the wick closed exactly at this area, at this point here. But what happened? It got rejected. So you should not buy here because there's no sign of sellers entering the market here. There's no strong sign that sellers will continue the market already, because the sellers has already exhausted their power here. And remember what I said, that after a weak bearish candle form, if a weak bearish candle form, then followed by a strong bearish candle, is a sign, and it broke the area, the sign that sellers are becoming exhausted. That means sellers are becoming weak. So buyers will enter the market. And this is what happened here. A weak seller's entry and a strong candle. A strong candle is a sign of reversal. It means that at this time, the sellers it means that the sellers at this time are now weak. Sellers at this time are weak. Yeah. Okay, for a perfect hammer candlestick, and if you are trading hammer candlestick, you should expect that the wick should be longer, at least twice the body. For a perfect hammer candlestick, you should expect that the wick should be longer, twice the body. Twice the body. The wick should be longer, twice the body for a perfect hammer candlestick. But all this that look like a hammer candlestick, they can also reverse the market. And this one also, they can also reverse the market. But this is not the real hammer. I'm just using this as an explanation. This is, yes, this is a real hammer candlestick. The wick is twice is longer than the body. So this is a perfect hammer. So this is not the perfect hammer, but any candle that looks like a hammer candlestick, you should take that also as a hammer candle, because you cannot be seeing perfect hammer candlestick like all this. You cannot be seeing this candlestick all the time on your chart. We see mostly candlestick like this, yeah, or like this. So for a perfect hammer candlestick, you should expect to be seeing this. But this one look like a perfect, no, it looked like a hammer candlestick, but not perfect. So you should take that, because hammer candlestick is So it's a candlestick that has lower wick, then body, or upper wick and body, just like the shape of a hammer. So it should be twice longer than the body. That's the perfect hammer candlestick. Okay. Now look at it. This candle close here. On reaching this level, we got rejected from buyers. Is that the buyers are here. Then it close here. So you should not expect that because already the sellers have become weak here. The sellers have been exhausted. The sellers are not powerful again. That's why you're saying that after this candle, the next candle will form a bullish. So this is a sign that the sellers are not interested in the market. You can see the buyers also want to try to go up, but rejected from sellers. So it is this area that the sellers are strong. It is this area that the sellers are strong, not here. So if this area is a strong sellers area, it means that after this bearish candle, you expect another bearish candle. But here, the area is here. Sellers entry point is here because of this strong buying pressure. The buyers try to go higher, push the price higher, but rejected from seller. And here, there's no strong sign of sellers here. It's just an exhaustion candle. See that sellers are not in the power. Sellers are not powerful again in the market. That's why I say that after this bearish candle, next candle form a bullish. Okay. Okay, now I think we should continue to the next part. Next part what is shooting star candles. The shooting star candles. Okay, the shooting star candles. Shooting star candles are candles that has upper long wick and very small lower wick. And this is a bullish candle. Same thing, upper long wick and very small lower wick. And this is a bearish candle. So this is a shooting star candle. Now, what are the psychology behind these candles? It means that check. Okay. Now, what are the psychology behind these candles? The psychology behind these candles is that the buyers try to push the price higher, but on reaching this level, it got rejected from sellers. So the sellers are here. And the buyers manage to form a bullish candle. Same thing is happening here. The buyers try to push the price higher, but on reaching this level, it got rejected from sellers. And the sellers form a bearish candle. But this lower wick is the same. What happened here is the same thing that is happening to this lower wick. It means that the sellers still want to push the price lower, but on reaching a particular point or level, it got rejected from buyers. Same thing is happening here. So let's see them how they behave in the chart. So inverted hammer candlestick. Inverted hammer candlestick is also a sign of reversal and also a continuation sign. Now look at this candle. Look at this candle, inverted hammer candlestick. I can see a very small wick here. So it means that after this candle close, the buyers try to push the price higher. You know that previously there's a seller's area here, seller's entry, because after this bullish, the next candle form the bearish. This is seller's area. So the buyers try to push the price higher, but on reaching this level, it got rejected from seller's area. And sellers still possibly make a bearish candle. Same thing again happened that the buyers also want to push, the sellers also want to push the price lower, but on reaching this level, it got rejected from buyers and closes here. So this is inverted hammer candlestick, a continuation sign of bearish downtrend. You can see inverted hammer, a continuation sign of bearish downtrend. And here, inverted hammer, reversal candlestick. Here also, continuation sign. You can see, and here also, a continuation sign. Inverted hammer, a continuation sign. So it doesn't matter, maybe the color. We see the color, don't panic whenever you see the color. Someone will say this is an inverted hammer or is a sign of the reversal, a bullish, that means the market wants to go. No, not this time, because previously you can see a seller's movement. And a seller's movement, so the next level is here. Let me show you. The next level is here. The next level is here. And this candle form as a continuation of this bearish downtrend. So sellers already started their movement here, but this candle form, maybe because of previous buyer's entry or buyer's area on the left side, or maybe because of a weak sellers here. Because look at this is a weak seller, upper rejection and lower rejection, a weak sellers after a strong buyer's movement. That's why maybe this candle form because of that. But this candle form, whenever you see a strong bearish downtrend, and this candle form is a sign that sellers still want to continue the market to this level. So the level is far. That's why you see that a strong bearish candle form at this level, and then buyers push the market higher. So it's a strong sign that the sellers will continue the market. Okay. Same thing with bullish and same thing with bearish. So you should not worry about the color. Don't worry about the color. And also as a reversal sign, I'll show you as a reversal sign. Reversal sign, it should be maybe at the end of a support level. Now look at this, a continuation sign that is after a strong seller's movement. The next can become a bearish, now a weak buyers, a continuation sign of this seller's movement. Because previously there's a buyer's entry, but here you can see a strong buyers, a strong bullish candle, but here a weak bullish candle. So it is now a sign that the sellers still want to continue the market, at least to the next level, which is right here. So now as a reversal sign, let's see how it works as a reversal sign. Batted hammer as a reversal sign. Now look at this one. Batted hammer as a continuation sign of bullish uptrend. You can see reversal sign, inverted hammer as a reversal sign. You can see after a strong seller's movement, but on reaching here, a bullish inverted hammer occur. So it is a sign that the buyer still want to push the price higher. You can see now. If you want to analyze this, and if you want to know after when you see a inverted hammer, maybe the market will continue. You can see after a strong seller's movement, you are seeing a weak buyer's entry, but you are not sure if the market will continue downward or will continue higher. But what happened? Next can to form a bullish, but not this time. How do you analyze this? Firstly, you check the momentum, check the downtrend, the trend. You can see the trend is down, and I check the momentum. Momentum is here. Look at this momentum. Now, after checking the momentum, check what happened to those candles forming at the momentum. Check what happened to them. Firstly, this candle close here. This bullish candle, it closes here, and then there's a gap. There's a gap down. So buyers still want to continue the market, but on reaching this level, we got rejected from sellers. So already there's a seller's activity there, there's a buyer's activity there. Again, this candle close as a bearish candle. Close as a bearish candle here. Also, the buyers still want to push the price higher, but on reaching this point, it got rejected from sellers. So still, the sellers form a bearish candle. Now, there is another buyer's activities here. Again, now, this candle close here. The buyers still want to push the price higher, but rejected from sellers. You can see this upper wick rejected from sellers. Now the sellers try to form a bearish. Now the sellers still want to push the price higher, but rejected from buyers. Now you can see that this 1, 2, 3, and 4 is a buyer's activities. Already buyers have already dominated this sellers movement. They are trying to enter the market. They have already dominated the sellers movement. It means that after the confirmation of this lower rejection, buyers will continue the market. Even after the buyers enter the market, you can see there's no lower rejection. It means that buyers now are still strong to push the market higher. They are still strong to push the market higher. So now this bullish candle stand as a continuation or a reversal bullish trend. Okay. Now I repeat again because I want you to understand it well. If you want to predict these candles here, when you see this bullish inverted hammer, the first thing you do is check. The first thing you do is check the trend. The trend is downtrend. Now, you after checking the trend, check the momentums. What happened here? What happened to the momentums? Where are the activities of buyers in this momentum? We have seen it 1, 2, 3, and 4. So because of this, the buyers try to form a bullish trend here. Buyers try to form a bullish trend. So it means that this is a sign that the buyers are now more powerful than sellers. Because after this candle close, immediately buyers try to go more up, but on reaching this level, because previously this is a seller's area, on reaching this level, got rejected from sellers, and they close exactly at the buyer's area. Because here we can see a strong buyers. Now, how do you know this is a buyer's area? Let me show you. Here we can see the buyers. Now, let me tell you something. Buyers and sellers area are not in the market. So take note of that. They are not in the chart. Buyers and sellers area are not in the chart. It is you that will find them. So it is not written on the chart that this is buyer's area or this is seller's area. It's not written on the chart. It is you that will look for them. Where is the buyers and where is the sellers? Where are they waiting and where are they going to stop the market? Yeah, I saw, look at these candles. Look at these candles here. The buyers enter from this level, and again, this is a buyer's area. And again, the buyers try to push the market higher from here, here, and here. And this candle also got rejected. It means that from this level, here, after this buyer's entry, and again, rejection from buyers, the buyer's activities. So at the buyer's activities here, this candle, you can see we have already drawn an area. This is a buyer's area and a rejection here. So this candle closed at that area with a new high and a strong buying pressure. That's why the next candle formed a bullish candle. The next candle will form a bullish candle because of the full confidence that the buyers still want to cover up. You can see there's no lower rejection. Full confidence. No sign that sellers still want to push the market lower. No sign. But the full confidence because this is a buyer's entry here, and again a rejection. So this area is a buyer's area. This area is a buyer's area. From the body, the closing or the opening price here to this lower price here. So this is a buyer's area. So they are not written on the chart that this is a buyer's area or this is a seller's area. So it is you that will find them. If you notice that even on the left side, the buyers and sellers, the market is still respecting that level. Let me draw the line. On this level, and again, this. So this here, these two lines are drawn a buyer's area. So you check on the left side, you can see this candle, which is here, and this candle form a bearish candle here, but on reaching this level, because it closed inside this box, on reaching this level, it got rejected, form a bullish candle. But here, this candle close or break the two levels, the area, that's why I think the next candle form a bearish. So if you go to the left side, you will notice that the market is expecting that area. You can see now after the area has been broken as you expected here, the area now has been broken. And here again, and here this candle didn't reverse because of strong sellers entry. Strong sellers entry. Previously, it broke the level. Again, the buyers reversed that area, so it still broke the level. It's still a seller's area, and this candle form at that area didn't reverse because of strong sellers entry. And the strong sellers entry, if you compare to previous bullish candle, you will notice that the bullish candles and the sellers candles, they are almost the same. Upper rejection, and again here a lower rejection, upper rejection here, and a very small lower rejection. Even the same body, it means that the sellers and buyers are more powerful. But this candle closed here, and previously a buyer's area, it closed here. Still, the buyers were not able to form a bullish candle. Instead, the sellers put the price lower. So when you see the price or you see this type of market situation, this type of market, after you've seen a strong seller, you should know that here, the buyers are becoming weak because of this upper rejection. Rejection from sellers, a strong seller's entry. And now we are seeing a strong candle at that area because previously it was a buyer's area. But now I saw on the left side that the area has been broken. The sellers are already break that area twice. It means that that area is not more strong again. Now you can see rejection, and again this candle close at that area become the seller's area. So if you go to the right side, you will notice that the buyers also are respecting that area. So let's see. You can see here. After this candle close here, a spinning top candle form at that area, but didn't reverse. It's a sign that the buyers still want to form a bullish candle. Forming a bullish candle at that area should be a weak candle, not a strong candle. It should be a weak candle. After this candle got rejected, the next candle formed a bullish candle, but a strong body. And here, a weak body. So this is a sign that buyers still also is respecting that area. On the left side, you can see so many rejection because after these buyers have already broken that area, it becomes the buyer's area. You can see so many rejection. So now we are not going to that. I will explain that to you later on buyers and sellers area. So let's quickly go to the next candle, which is Mariposa candle. One without upper wick, lower wick. British candle also without upper wick and lower wick. Also, we have some without lower wick but upper wick, or without no upper wick but lower wick. So let's see that in the chart. They are also a reversal candlestick or a continuation candlestick. So it depends on the market situation, depends what is happening to the market. Now look at this one, a strong bearish candle, no upper rejection, no lower rejection. So this is a Mariposa candle. And Mariposa candle stand here as a continuation of this seller's movement because the next level is here. So this Mariposa candle stand as a continuation of this seller's movement. So Mariposa, take that from today. Mariposa is not only for reversal sign. It's a strong seller's entry. Most of the time when you see me uploading video, I'll always tell you guys that this is a Mariposa candle. It continues the market because of market situation, what I saw in the market. So it is not a reversal candlestick. So don't take that. Don't say Mariposa candle is a reversal candlestick. It can also be used as a continuation candlestick, and the next level is here. So the market will continue to that level. Let us see some rejection. Here, buyer's entry, buyer's entry. So the market will continue to that level. And this one also, the one with upper wick and without lower wick. This one also is a Mariposa candle, a continuation sign of downtrend. But previously, maybe there are some buyers, you can see some buyers. So it's a reversal sign here. If there's a level here on the left side, and you see this Mariposa candle, it's a reversal sign. It means that this is a sign that sellers or buyers want to enter the market. Whenever I say Mariposa candle, you can see no upper wick but lower wick. And also, like this one also, there are some buyers at this area. There are some buyers at this area. See the Mariposa candle reverse the market. Like this one also, it reverse the market because previously this is buyers area. I see so many rejection buyers area, and it goes at the buyers area. That's why the next candle was a bullish. This one also a continuation of uptrend because previously it broke the previous sellers area. So it continued the market. This one it reversed the market because already the market already reversed. So it is a sign that market will want to go more down. This one also it reversed the market because previously it's a resistance. So I will show you the reason why this candle reverse. Very simple, and it's a logic. Most of the time when you see me trading like this, you'll be expecting me to say this candle will go more up because the level is here. No, it didn't happen that way. Most of the time when I start trading, before I start making the video, I will first zoom in like this, zoom out like this. I will check the chart. My eyes are very sharp that to the extent that immediately I saw the chart like this, I already know what's happening in the market. Yeah, when I saw something like this, I'll first zoom in. I'll check the chart, then I'll look at this. I'll focus on the candle. What is the candle telling me? So already here, I've already know what will be the next candle after seeing this Mariposa candle. Because here we have a level. Let me draw the level. This is one of my secrets I'm sharing with you guys. Because here we have a level. Here we have a level. You can see here it reverse, here also it reverse, here also it break through, and here also. And this candle close at that level. A Mariposa candle close at that level, it reverse. So once I saw this type of market situation, most of the time I will not draw a trend line. And if you have watched my video which I make on PPA strategy, you see what I'm saying. Draw a level. So this is a seller's entry point. Seller's entry. And this candle, this Mariposa candle goes at that area, is a sign that the market wants to reverse. So this Mariposa candle is a reversal candlestick at this area. That's why the next candle form a bearish candle. And this also is a Mariposa candle, no upper rejection, a sign of reversal. Why? Because look at this buyer's entry. Look at this buyer's entry. And it got rejected for buyers. That's why the next candle. So this is one of my secrets that some of you will be confused that how did I know why this candle reverse when the next level is here? That is not how to trade binary option. So it is only when you are trading forex that before you can be taking your profit here, not binary option. Binary option will not ever show you something like, okay, next level is here. Maybe the market will reverse to that level. I've already saw these entries here. I just have my mind that, okay, the next candle I'll be seeing here should be a reversal candlestick because already I have seen some sellers entry here, which is sign that the sellers are more powerful here. So I'm expecting here to see a bullish candle here. That's why I will place a put option here. But you'll be wondering that why is it that I place a put option when the next level is here? You not know that I've already checked. So this area at this time, this Mariposa candle is a reversal candlestick, and here also this one also a reversal candlestick. And if you look at the trend, the market, if you note, you will notice that yeah, this market didn't reach this level. Let me draw this line very well. This bullish candle didn't reach this level. It's spinning top. Very well. Didn't reach this level, but the body is still, there's a little gap to that level. But why is it that after this spinning top candle, next candle form a bearish candle? It's because the secret is here. Although it's not a secret, most professional traders also do that. The secret is here because of this trend line. This trend line. Because of this trend line. You can see after it crossed a sign of reversal because of this weak bullish, a strong candle. After it crossed this seller's area, the next candle form a bearish. Once I see that, once I notice that, most of the time my chart will be empty like this. My chart will be empty like this. But once I view it like this, I know that okay, yes, the buyers are here, sellers are here. Okay, I'll just focus on this candle, waiting for a reversal candlestick, like a spinning top or hammer candlestick or a Mariposa to reverse the market. So if you're expecting me that you say maybe the market should go up higher, continue the market. No, I've already zoomed out the market and saw this type of market situation. That's why I placed my trade with confidence. Okay, so this is how a Mariposa candle can be seen as a reversal and a continuation candlestick. It is not only for reversal candlestick, it's a continuation candlestick, a strong candle. They are strong candle. Okay, and yeah, this one also I think I will have explained this inverted hammer. This inverted hammer, explain it. And here also a pin bar. I didn't draw it well, but this is a pin bar. A pin bar has a small body compared to hammer candlestick. They has a small body. Also, a pin bar also look. There are some pin bar that look like this, like inverted hammer, but they have the tiny body. Long. They are made on the chart. Let me show you. Look at this pin bar. Pin bar. And look at this plain pin bar. Look at this, a pin bar. So it's the sign that the market want to reverse when you see a pin bar at the support level. Or when you see a pin bar at the resistance level, it's a sign that the market want to reverse. Also, it is a continuation sign that the market want to continue, either continue going up or continue going down. So all these candles I'm showing to you, they have the same way, either a continuation of trend or a reversal candle. Now look at this pin bar, a very small body here, a very small body. And what is the psychology behind this pin bar? So let me explain. The psychology behind this pin bar, if you look at here, a weak candle, seller's entry, a sign of reversal here. And again, a strong bearish candle, a continuation sign. And again, a spinning top candle, a reversal candlestick. And then after this reversal candlestick, a pin bar appear at this time. It means that because of this sellers movement, sellers already started their movement here. So this power of sellers here still want to push the market lower. But on reaching this level, the buyers rejected the market. And what happened? It closed as a pin bar. A weak bullish candle. That is why after a pin bar, the next candle form a bullish candle. So this is a sign that the market wants to reverse. Because if this, let me show you one thing. If this pin bar is a green candle, a bullish, if this pin bar is a bearish candle, if this pin bar is a bearish candle, the next candle will go down. Once I see a bearish candle here as a pin bar, the red candle, the next candle will go down. Short, the next candle will go down. Reason why? Because here the power of sellers are very strong, and again, maybe at the support level, I'm still seeing a bearish pin bar. It means that the buyers were not able to make a bullish candle here. So still sellers was able to make a bearish. It means that still sellers are still in power. They will still continue the market. But here, the buyers possibly make a pin bar, a small body. So this is a sign that yes, upon all this bearish downtrend, the buyers still form a bullish candle, sign that the market wants to go up. But if this candle will form as a red pin bar, the market will go down. Because here, the buyers try to form a bullish candle, that's why the market reverses. So once I see a situation like this, a red pin bar here, I will go with sellers with confidence. I will not doubt it. I'll just go with sellers straight because I know that here the momentum of sellers is very strong. But on reaching here, instead of buyers, but I'm seeing a bearish candle, it means that the sellers are still more powerful to push the market lower. So I'll go with sellers. Now, these are the psychology behind pin bar. Now let's go to doji candlestick. We have so many doji candlestick. We have the long-legged doji candlestick. What I mean by long leg doji candlestick is that the wick are very long and longer than the horizontal wick. The vertical wick are longer than the horizontal wick, so they are called long leg doji. This one is a this one is a gravestone doji. I will try to remember this. A gravestone doji, and this one is a cross doji. And this one, most of you, I don't know, maybe you have seen this kind of doji in the market. This usually occur on 5-second chart. This type of doji, no upper wick, no lower wick, just a horizontal wick, a horizontal doji, a horizontal body. And this candle also can be used. These candles also can be used as a continuation sign or reversal sign. Here, what are the psychology behind all these doji? Let's see in the chart. And never you make that mistake that whenever you see a bearish candle here with a small body, you call it a doji. This is not a doji. Never you make that mistake. A doji doesn't have any body, doesn't have any color. So I think maybe I'll find any one there. So let's see that 5-second chart. But they are, and this is OTC market. OTC market doesn't have too much doji. That's why this one of the things I like OTC market. We don't have too much doji. Here we can see a doji here, a doji candlestick here, but a very long tail wick and a small upper wick. This is a doji candlestick. And what happened? It reversed the market. Because previously, yes, you can see also this one also is a doji candlestick. The doji candlestick. What happened? It continued the market. So all these doji candlestick can be used as a support, as a continuation sign or reversal sign. Whenever you see them in the market, observe them. Don't just say, and there are some reason. Okay, there are some reason behind this doji candlestick forming in the chart. There are some reason. Maybe here, after this Mariposa candle, the next candle is supposed to be a the next candle is supposed to be a bearish, but it closed as a doji. Means that no sign of buyers and no sign of seller. So because of this previous bullish candle, the next candle form a bullish candle here. So here, this the doji candlestick is supposed to be a bearish candle, not doji. Supposed to be a bearish candle, but here no sign of sellers. And doji candlestick also means indecision between buyers and sellers. So when you see a doji candlestick, you should always take note of the previous candle here. If the previous candle is a bullish candle, that means that after this doji, the next candle should be a bullish candle here. So this is a sign that sellers are not interested in the market. A indecision between buyers and sellers in the market. So it's a continuation sign after this bullish trend. The market wants to go more up. Now, a doji as a reversal sign is what we have seen here. Maybe the market wants to reverse. It's what we have seen here. After these strong sellers on reaching this level, maybe sellers still want to continue the market, but here no sign of sellers to continue the market. No sign. It closed as a doji. It means that buyers will continue the market. So this doji now is now a sign of reverse, a sign of reversal. Why this one is a continuation sign? This one is a sign of reversal. When you see that in the chart, first analyze the market before you place your trade. And you should try to avoid that also whenever you see them on your chart, because they are very dangerous. And this is one of my enemy in real market. Whenever I see so many dojis, I will just skip that pair. I will go for another pair because I hate seeing doji. Doji candlestick usually happen whenever you think that this market will give you a winning trade, but unfortunately, it gave you a losing trade because maybe your entry is late. Whenever you're expecting to see a short trade, maybe you are winning this trade and this can just close at a doji. That is why I hate doji candlestick in my chart. So I hate seeing them. So also you too also should try to avoid any doji candlestick. Okay. Now these are the psychology behind each candlestick on the chart. You can see here we have so many indicators. We have so many indicators, but these indicators will not improve your winning ratio if you don't have the knowledge of this each candlestick in the chart. Once you have the knowledge of each candlestick, then you can apply them using the same thing as using the indicators. Okay, you should not just trust on only indicators. You want to rely on indicators. So you should just pay attention to each candlestick. What are they telling you? This is inverted hammer, but let me check the next level. The next level I think is here, and I've seen a inverted hammer. Okay, the next level is here, and it make a new high. It means that the market still wants to go more up. And here, maybe I'm seeing hammer candlestick, and the next level is here. A hammer candlestick, and the next level is here. It means that the market still wants to go more down. That's why I see a bearish trend. And here, maybe they are saying inverted hammer and shooting star. Here, inverted hammer. Inverted hammer to reverse the market because of these levels, because of previous levels. Here, this one. The reason why this inverted hammer inverts the market for bearish trend is because one, there are previous levels. One, these levels. Two, this level. You should take note where the wicks are. This level, you can see this is a seller's area. Already drawn the area. This is a seller's area. So now the buyers try to push the price higher, but rejected from sellers at this level. So what happened? A strong rejection. a strong rejection from sellers. That's why the next candle form a bearish candle here. So this inverted hammer is a continuation of this downtrend because previously you can see a strong seller's entry even without buyer's activities. So the next candle form a bearish candle. And here also inverted hammer reverse the market. Hammer candlestick continue the market. Here also hammer candlestick it continue the market. A pin bar it reverse the market. A weak inverted pin bar reverse the market. This is a weak inverted pin bar, not shooting star. Shooting star is like this. The body is strong, not a weak body like this. Shooting star is like this, but inverted one. Okay, so this is a weak pin bar, so it reverse the market, and this one also reverse the market. Here also it continue the market. Maybe the level is here. Maybe the level is here, and then reverse the market. And see, this is what I'm saying. The level is here. The level is here, and this inverted hammer form at the previous buyer's entry point. It means that the buyer will still form a bullish candle because the level is here. And what happened? The buyer still tried to go more up, but rejected from seller. So because this is OTC market, this next candle is supposed to be a bullish candle, but because of OTC market, that's why I say you should not always trade on OTC market all the time. You should give respect to OTC market, but whenever you see your best opportunity in OTC market, then you can place your trade. So this candle here is supposed to be a bullish candle. Maybe immediately the sellers enter the market, push the price lower, rejected from buyers, and now closes here. Buyers still want to go more up because of this inverted hammer, a continuation, a pin bar, inverted pin bar, a continuation sign. But reaching this level, sellers push the market lower. So this is OTC market. The next candle is supposed to be a bullish, not bearish here. Here also inverted hammer, it reverses the market. Okay. You can see all these candlesticks are the most important candles in the chart, which you need to pay attention to before you place your trade. Before you place your trade, first know where all these candles are formed. First know where are they formed before you place your trade. Okay, a spinning top candle, hammer candlestick, but a shooting star candle, Marubozu candle, inverted hammer, a pin bar, and the doji candlestick. Okay, now this is all about the candlestick, the psychology behind candlestick. So I think the next one is, let me see. I'm coming. Okay, the next one is that is importance of candles. That is what we have already said. The psychology, candlestick psychology, and the importance of candles. So I will welcome any question or any suggestion from you guys. Or should I unmute the? Should I unmute? Let me hear your response. Should I unmute everyone so I can hear your voice, or should type here at this Zoom group chat or the WhatsApp? Okay. Should I unmute? Okay. Now I should attend to any question now. So if you have any question, I think you should have any question here. Okay. Ask your question.
Hello.
Okay. You said you made some parts. Which parts? This is Linda Sule. You said you missed some parts.
Yeah.
That means you didn't come early.
From the explanation,
Okay.
I was not feeling fine. Actually, I take some drugs, so I came up late.
Okay. Okay.
So if possible, I may wish to have the video, sir.
The video. Okay, no problem. Okay.
Hello.
Hello.
Yes, I have two questions.
Okay. Perhaps.
First one is how to draw a good level.
Okay. Okay, I should go to the chat.
Okay.
Okay, now we are in the chat now. Okay.
Yes.
You mean how to draw the levels?
Yes.
Okay. Let's say you want to draw a levels here. Let's say this level. This is a bias entry point, and you want to draw the level. Like I said, that levels, support and resistance levels are not by drawing a single line. It is an area on your chart. This is where buyers and sellers are queuing in the market just to buy or sell the market. So buyers and sellers are not seen in the market. So there is an area they choose the support level or they choose the resistance level to buy or sell the market. So now if you want to draw a level, you should draw it properly. Draw it as an area, not by drawing using one line. Whenever you see me using one line, I already know the area where I will place the second line. That's why I just place, most of the time I'll place my line here, maybe at the body of the candle or at the wick. I already know the area. Maybe I place at the wick here. I know that the next line I will place will be at the body. Any place it here. The next line I will place will be at the body. And whenever you see this kind of market situation, you should not always go with this line here. We should not always go with this level because here we can see some movement here. Some movement here. Let me see. Let me show you. Look at this level. Some movement here. This is a buyer's entry point, which is also a support area. A buyer's. And now, if you want to draw a support area, this is how you draw it. Support area. This is how we draw it. Okay. Now, this is a support area. So now, when you want to use this level, this area, this level, this bullish movement, this bullish entry, if you want to use it as an area, you should not treat it as the way you treat the horizontal, because this market is not a ranging, a sideways market. It's a diagonal movement. What I mean by diagonal movement is when you see market forming like this, forming like this, like this, forming like this, like this, like this, like this, like this. That means it's moving up. This is a diagonal movement. But when you see market forming like this, like this, like this, like this, like this, like this is a ranging market. It's sideways movement. So when you see the market forming like this, that's why I say whenever before you place your trade, you should first check the trend and check the momentums. First check the trend. Here, you look at this trend, you will not be expecting the market to reverse at this level. Let's look at the momentums here. You can see the momentum here is forming a diagonal movement, a rejection and a bias entry, rejection, bias entry, rejection, bias entry, rejection, bias entry. That means the market is expecting this movement here. So the market on reaching this level, it breaks the level. So the market will not reverse. Already it shows some sign of reversal here, this upper week. But this market will not reverse here. This is not the real level. This is just the minor level. But here the market is expecting this movement. That's why the market reversed so many times on this level. You see here also it reversed, but make a new low. That's why the next candle form a bearish, and here a weak candle after forming a strong bullish and bearish candle. Now a strong candle close exactly at that level, buyer center. A break that level, buyer center. Again, a new low, a bearish candle, and then this one also reverse. So this is an area where the market is respecting. So you should not be expecting to draw a horizontal level like this. Look at this. Look at this. The buyer strong buyer entry. And here, what happened? The market reversed. Let's see another one. Look at this. A strong buyer's entry. And what happened? The market broke that level and reversed. So these are the level you pay attention to, because also there are also a movement here. Look at it. There are also a movement here. So you should not compare the sideways movement to the diagonal movement. So here some of you will be trying to look for buying opportunity because you saw a buyer's entry, but you never know that the market is respecting this level. So when you are drawing a level, so if you are drawing a level, first check the behavior of the market on the left side. How is the market moving? First check it. Once you check it, then you know exactly what to do. Now here, you can see that there are so many levels. That's why I say you should not trade on levels or market with so many levels. You can see so many levels here. There are so many levels. There are so many levels. Now you'll be wondering that how will you trade on this kind of levels? How will you trade? First thing you do, you draw, you choose a highest point here. This is the highest point. You can see that the other point, the other highest price didn't reach that level. So if you want to draw an area in this level, you draw from the highest price of the market, then to the closing price or the opening price of the market, any one, the lowest one. I think this is the lowest one. This last bearish candle. This one also is the lowest one, but the major one is this. So it means that after you are drawing from the first high here, the highest point, you now choose the lowest point, which is right here. So it means that anytime this buyer tries to enter that level, reverse. You can see, he entered the level, it reverse. Here also, he closed at the level, it reverse. Here also, he closed at the level, it reverse. Here also, it reverse. But here, he break it with a new high, because a new high is having a closing above this previous highs. That's where the next candle form a bullish candle. Now, after this candle form a bullish movement, it now become a buyer's area. You can see previously it is a seller's area, but after it broke this level, after this buyers broke this level, it becomes buyer's area. That's why you are seeing so many rejection in the past. Again, rejection, it reversed. Now, after these two formation, the market start respecting this trend movement, this diagonal movement. Yeah, market start expecting this movement here because of this buyer's area. So it reached here, reverse, reaching this level, it reverse. Here also close it below, but form a bearish candle, also it reverse. So buyers reverse the market. So I will also tell you how to identify a false breakout. I think that would be, I will say something on that on maybe tomorrow class. That will be tomorrow. How to identify a false breakout and a real breakout. Okay, I'll show you that. So this is how you draw a level. Maybe the price was here. Maybe the price was here, and you want to draw the level. You choose the highest point of the market and the lowest point here. In the lowest point is here. This bullish, bearish can be the lowest body. So after changing that, means that this whole area is a seller's area. So any bullish that close at that area must surely reverse. You can see it reverse, here it goes reverse, here also. Here also, because it's very strong, after this arranging a consolidation area is very strong, so they change their entry band here. It means that the market will still reverse anytime. Here also it reverse, but here it break that level. So this is how you draw a level. Now let me show you how to draw the support level. Here. the support level. The highest point here is right here. The lowest point, the lowest price. So it's not higher, it's lowest price. And now the body here. So this from this area here is a strong sellers area. It's a strong buyers area. So now let's check what happened to those areas in the past, in the future. You can see the jet from that area is reversed. He also closed as a strong, confident that they will form a bullish candle, a bearish candle, and reaching this level, it reversed. Get rejection, it reversed. But here it didn't reverse because they are trying to form, because already buyers already show a weakness here. That's why they didn't reverse. So all those levels, whenever you see a weak bias entry in this level, you should know that the market will not expect. So I will show you next class how to identify a strong bias movement and a weak bias movement, or how to identify fake breakouts or false or real breakouts. So this is most of the thing that trader loses their money because of fake breakout and a false or a real breakout. Okay, this is how you can properly draw an area,
Okay.
not to draw a level. Okay.
Okay. Thank you very much.
All right. So any other question? I think that would be maybe any question you would like to ask should be in the WhatsApp group. But I think if I can attend any more questions here, the more better. Okay. Okay, now this is the importance of candlestick in the charts. We have the
Hello, sir.
okay. Okay, I'm listening.
I have a question. Sometimes you will see two spinning top at the same time appearing at a level. So are they going to reverse the market or what?
With a strong reason, they should reverse the market. Like this, it appears at the resistance level, reverse the market. Like this, at the support level, reverse the market. So they will reverse the market whenever you see a spinning top at the level, reverse the market.
I'm saying sometimes you will see them like two spinning top at the same time.
Yes.
Two at the same time.
Yes, you can see them. Like most of the time, you can see two spinning top in the middle of the trend. Continue. That is a strong sign they will continue the market. They are showing signs to continue the market.
Okay.
Like this one now, spinning top candle, upper and lower rejection. See, they continue the market. Here, there's no bias. This week here, there's no bias. The buyers are here, but still, it forcefully make a new low. So it means that sellers still want to continue the market, and this is spinning top candle. So they can be used as a continuation sign or a reversal sign. Those are the important candles. Like this one.
Thank you, sir.
Okay. Any more questions? Any more questions? Okay, I think there's no question now. So tomorrow we'll be talking about candlestick wicks, the support and resistance strategy, the buyers and sellers area. So that will be the next class. Okay. Okay, guys. Thank you for joining this class. And I really appreciate you that you really want to learn. Okay. Keep ITM, keep trading. Okay. Okay. Problem. Okay. See you in next class, guys. Yeah, same time tomorrow. Same time tomorrow. Okay.